Hey, how are we doing today, everyone? This is James coming to you from Dividend Stock Talk. It is 9:06. I'm a little late. I want to say sorry for that. I was busy doing some research on a separate subject, not dividends, but something a little bit different, just trying to get my life in order. But we're here to talk about dividend stocks and how to invest more specifically in dividend stocks for a monthly or a weekly cash flow. I like investing for weekly because I like getting paid every week. I like to know I have money every week to do whatever I want. Whether I'm just going to take that and reinvest it next week, that's one thing. But I like to have the option available. And we're going to be talking about options tonight, so that's kind of a interesting little side point, I guess. So like I said, it's 9:06. Today is Thursday, the 6th of April. And we are one day away from the first Friday of the month. The first Friday of the month is tomorrow, and we have options expiring tomorrow. And I'm going to need to take care of that. So I'm going to show you what positions we're in at the moment, go through a little bit of market data on that, and find out what we're going to do about those positions tomorrow. Now, we typically look at two different accounts that I trade. I trade like 4 or 5 different accounts on a consistent basis. The two we're going to look at are the two I always look at, so show you guys what what's available out there. One is just dividends on steroids, which we invest in dividend stock. We look for a certain percentage of movement before the EX date, and we use some interesting software that we've come up with over the years to pinpoint which ones are best ready to give us that movement that we're looking for. And this is all done on a percentage-wise based on historical performances, blah, 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 yada, yada. It's just some algorithms, which are other words for some fancy mathematics. So we have some fancy mathematics looking at data to find out which dividend stocks are ripe for us to get what we want. And we've been doing this for a few years, so we have a little bit of a track record. And this year, believe it or not, the numbers that we are reaching are crazy. Lack of better words, crazy. I can only pinpoint it is because you have a non-political person in office. And ever since you got in office, the stocks are going one way or the other. Because you have pivotal points. And that's certain points of the year or certain points in history when certain things happen. That's like the crash of 1929. That happened. It is forever in our history. The dot-com boom and the dot-com bust back in the 2000s. The financial crash back in 2008. Everything was affected. And most recently, the election of 2016. The look at the election on 2016, a lot of stocks either went through the roof or went down. I have not found one yet that stayed even keel throughout the whole election process. It's just one way or the other. And for the most part, most of the stocks are moving up. So with that being all said, all that blah, blah, yada, yada stuff, let's jump right on and see what we're looking at. All right, so tomorrow, like I said, is the is the first Friday of the month. So we get some stocks that we're looking to getting out of, some positions. Right here, we're looking at our dividends on steroids. This is where we buy the dividend stock 10 days before the EX date. Okay, we reset our exit price to 2.5% over and above the purchase price. That way, we're only looking at a small percentage of a return. And we basically, this is a set it and forget it type of scenario where we buy the stock, we click on the little icon that we preset, which we're going to show you how to preset that, and then you just enter the amount of shares you want to buy, and then you set it and you forget it, and then you get informed when the stock is sold. So let's take a quick look at what we're looking at today. CL is Colgate-Palmolive. As you can see, we made $26 since we've opened, but we've lost $468 today. Why is that? Wow. CL. Let's open that up. Now, CL starts the year off pretty nice with $71. Goes sideways for quite a bit of the year. And then, remember I told you right around election time just a couple seconds ago? Look at this. 11/7. Right down here's the date. Okay, the election was 11/8. So look at this. 11/7, 11/8. This thing goes from $70, drops all the way down to, was that 66? That's not a huge drop, but it is a drop nonetheless. And what day did it happen? It happened right on election time. So she drops from the trading range of 71 down to the trading range of 66, goes sideways for a little bit. And look at this. She recovers from where she was earlier, back in that $74 area. So we had 2 down days in a row for Colgate-Palmolive. And what is our position for them? Okay, we got in on the 3rd, which is only 3 days ago, at 73.08. And right now she's at 73.13. So we're still up, but we still have a week and a half to go. Because we got this on the 3rd. And the 3rd, let's quickly pull this up. All right, the 3rd is here. So most likely for 2 weeks away, so 17th, 18th, 19th, 20th. So in this area is where they're paying out their dividend, the EX date. So most likely we're going to want to get out by the 17th, which is most likely next Friday. So we have between now and next Friday to see what kind of movement we're going to make. If not, we're going to collect 1,300 dividends. However much that's going to be, I don't know. But let's quickly take a look at what Colgate-Palmolive usually does at this time of year. All right, here's where we are right now. And this right here is seasonality. For those of you who don't know what seasonality is, they're basically taking one chart and putting it on top of another for however many years you want to look at. I like to look at 10 years worth of data. So I want to look at this year's, which last year, 2016, and then 2015, and then 2014, and then 2013. And then what they do is they use some interesting algorithms and some fancy mathematics and puts one chart on top of another. So they have some kind of idea of what the typical movement for that stock is throughout the year. So here's where we are right now on April 5th. So if we highlight from the middle of March to the middle of May, that's where we are. And we bring the crosshairs on this date here and cross-reference it with the red, which is what it normally does. So this thing has a normal upward climb for the rest of that time period that we're looking at right now. So I'm pretty confident with the Colgate-Palmolive, and also Colgate-Palmolive is a dividend king. So for those of you who don't know what a dividend king is, that means every year for the past 50 years or more, they have increased their dividend payments to the shareholders. So if I choose to keep it, in 2 weeks I will collect 1,300 of these little dividends, however many that is. If it's 50 cents, it's 50 cents times 1,300 of them. And if I want to hold it longer, another 90 days, I'll be collecting another 1,300 dividends, however much that's going to be. And I will continue to do that every 90 days if I want to. However, if you go across, you will see that 1,300 shares is tying up $47,500. So, am I really getting a good return on my $47,500? That's the question. Don't pay attention much to this number. This number is really irrelevant. However much money you have to start with, that's the number you're going to use to work with. Okay, so if you're getting 1% or 2% per month or per week on your $47,000, hey, great, that's $470. You know, 1% is $475. Okay, and if you're getting that once a week, great, it's $475 a week for the money to just sit there. Now it is a, how do I explain this? It is a very solid, a very conservative trading strategy. Because number one, Colgate-Palmolive is a household name. Number two, they've been in business for over 100 years. 3, they're a dividend king. They've increased their dividend payments for a minimum of 50 years. And they increase that payment every year. Keep those 3 great answers. 4 is the seasonality every year. Historically speaking, it doesn't mean it's going to happen again. I have to tell you that again. Every once in a while, I have to tell you the facts. Just because it happened last year and the year before and the year before doesn't mean it's going to happen this year. As an old saying goes, everything works out great until it doesn't. You know, that's like the sun's going to shine until it doesn't. You know, so just because Colgate-Palmolive has increased for 10 years in a row, you know, increased from what the charts are showing me, doesn't mean it's going to continue to do it this year. Okay, it doesn't mean that. However, the odds and probabilities are in my favor. Okay, so let's take a look at getting comfortable with investing $47,500 into Colgate-Palmolive. It's your money, you do what you want. I can't tell you what to do with it. However, let's look at the facts. Number one, you're investing in a solid company. Number two, they've been around for a long time. They have a proven track record. Number three, they've increased their dividends, like I said, for 50 years. And I'm repeating myself. Oh my goodness, this is terrible. All right, it's your money. You invest it the way you want. You're here to find alternative ways of investing. Now, number one, again, the numbers again. You're invested in good, solid companies. That's what we're here for. We're not here to invest our money and lose it. No, we're only here to invest in good, quality, solid companies that you don't mind holding. Now, I don't mind holding Colgate every 90 days, getting a dividend or 1,300 dividends. That's great. Look at what we got. Let's find out who STX is for a second, so I can more. Okay, Seagate Technology. I have no idea who they are or what they do. Isn't that terrible? I got 811 shares of a company. I have no clue what they do. Well, alrighty then. All right, so I'm taking my $18,754 and I'm invested into Seagate Technology. Is it a company I don't mind holding? Let's take a quick look at Seagate Technology. STX. Let's go back to the standard chart so you can see what we're looking at. Okay, STX, this is a lovely looking chart. It's kind of typical for a dividend stock. She starts out at 32, makes the low of the year drop about a month later to 1879, and then from May 11 all the way up until March 2nd, where she hits the high of the year of 49.79, and she gets into a little trading range and goes sideways for a while. It's great. It's a lovely looking chart. Now, that's what the company looks like. Now, seasonality-wise, this is what we can look at, or we can hope is going to continue to do. The blue line represents what it's doing so far this year. The red line represents what it's done for the past 10 years on average. Let me take one on top of the other, just conglomerate it together. Here's where we are right now. Let's isolate this right to about there. We're here, right here now. So it looks, STX might hit a little spike right there in the next couple of days, the next week or so. If it does, great. I can get out. Where am I? I'm at 46.25, and we're looking to hit 48.60. There's a good possibility I might take a look at this in a couple of days, probably the end of this week or the middle of next week, and saying if that little spike does show up and we can make money on it, get on out, because look, I don't want to hang out for this. What is this? 1, 2, 3, 4 months of downtime. That's tying up my money for 4 months, which I don't really need to. So if I can break even or come out a little bit on the positive side within the next week or two with STX, it's like it's showing right here, then that's what I'm going to do. Break even, great. I don't mind. All right. But as long as I can get out before the 13th, the 12th, 13th, because I really don't want to hang out for this stuff right here. I'll jump back in if it shows up again on the next, another 90 days after when it's ready to pay out its next dividend. What is that, July? Jump back in it on July. Hey, I don't mind. STX is a good company. I wouldn't have bought it if it wasn't. And I wouldn't mind holding on to it to collect the dividends. However, I don't want to collect the dividends. I want to collect a little bit, jump on out, and move on to the next one. So STX is something I might hold on to, but right now we're still down 1,300 on it. Although we made 200 today, that's okay. But we're still down 1,300 from the opening from when we bought it. So if we can get to break even or a little bit above that before this time period right here, then that's what we're going to do. Okay, so let's jump on to the next one and give you a quick analysis of that. Colgate-Palmolive, we already went over that. That was good. MasterCard, 1,600 shares. Oh, that's Macy's, sorry. Macy's got 1,600 shares of this one. Now, we bought this one quite a while ago. Okay, let's take a look. February, and we're still holding on to it. February, March, that's 1 month. April, that will be 2 months. So in another month, we'll be looking to collect a dividend on it again. So we collect 1,600 shares, which gave me 21 more shares. Okay, so that's not bad. It's $617. And if I hold it for another 60 days, I can collect another $617, somewhere in that area. But we'd like to get rid of Macy's. However, it doesn't look like it because we're down 5,000 on Macy's. Let's bring Macy's up here for a second. Okay, now Macy's starts the year off at 40, goes sideways for about a month, and then makes a drop from 40 all the way down to 31, and goes sideways, jumps up around August, goes sideways again, and here we are again. Remember I told you earlier, right, the election time, look, election time she went from 37, then it hit the peak of 45. That's an $8 move. 8 from 37 is about 25% increase in less than a month. That's pretty good. Okay, so she makes the high of the year in the last week of November, okay, of 45.24. Then she drops down to a trading range of 29, where she is now at 29.42. That's where Macy's is at the moment. Now, Macy's has been around for quite a long time, over 100 years also. No, they're not a dividend king, but it is a household name. So let's find out a little bit more about Macy's and find out what we can project them to do in the next couple of weeks, next couple of months. Okay, here's where we are now. This is not looking good because it looks like we're going to be holding this thing on for the next dividend payment. Because as you can see, the red line intersects right here, and that, my friends, is going downward. So it doesn't look like we're going to get rid of Macy's anytime soon. But hey, it's Macy's. Everybody knows who Macy's is. So I'm going to hold on to the Macy's because, number one, I don't want to take the loss. Number two, Macy's may just be around for another 100 years. Who knows? And, I can go for another $670 payment in another 60 days. Because we've already held it for a month and a half. So another month and a half, we'll hold on to it. You know what? Just for the fun of it, let's find out when the next one's coming up. I hope you guys got one of these, dividend calendar. What it does, we're going to put the stock symbol in. Macy's, just a big old M. Add, and then go. And it just tells me when they pay out the dividend. Okay. All right. So March, June, September, and December is when they pay their dividends. So am I going to hold it till June? I honestly don't know. Whereabouts in June? All right. That's the third week in June. June 12th. See that? Right around there. Okay. So third week in June. Don't need that. All right. Ooh, where was I? Okay, so we're looking at the third week of June for Macy's to collect another dividend on that. And will it go above what we're looking for? Don't know. It's just one of those things. So let's get back to our standard. All right, so we're stuck with Macy's. Now let's take a look at MasterCard real quick. Everybody knows who MasterCard is. And I only have 400 shares of MasterCard, but it's $22,000. Isn't that interesting? 400 shares of MasterCard at $22,000 and 1,600 shares of Macy's, $23,000. Go figure. Anyway, MasterCard. Let's quickly take a look at MasterCard. MA. MasterCard. Oh, what a lovely chart this one looks like. Okay, MasterCard starts the year out right around 94. She goes sideways for about 3 months, and she drops like a rock July 5th to make the low of the year. Now, from July 5th all the way up to where we are today, makes the high the 16th, which was a couple of weeks ago, March 16th, at 113, somewhere in that area. All right, since then, she's been going sideways for a little bit. Right now, she's at 112. And we're looking to get MasterCard, we're looking to get 114 out of MasterCard. Can we do it? I don't know. But where are we with MasterCard? Right now, we're up 300, and we made 144 on MasterCard. That's just today. So we are in the positive with MasterCard. So we could get out tomorrow if we wanted to just collect that 300, or we could just leave it alone and let it do its thing. Quickly take a look at when we got in and when we can expect it to pay its dividend. View the trade. All right, 322. 322. Okay, so let's go. 322 would be here. Oh, so they paid their dividend yesterday or today, one or the other. Bummer. Okay, hey, just for the fun of it, remember I told you we have 4 different strategies we use? We use the dividend capturing, dividends on steroids, double dividends, and then dividend equivalents or dividend investing. That's why we just click the equivalent of the dividend. So let's quickly take a look at MasterCard, because MasterCard already paid its dividend, which means we should be getting 400 dividend payments tomorrow or the next day, or date of record. So let's quickly take a look at what that is. Market watch. April 5th. April 5th. Why doesn't they show me April 5th here? This is tomorrow. Right, MasterCard's not there, but MasterCard's not showing up on here for some strange reason. Let's go to this other account, because this one apparently shows me more for some strange reason. Not showing me. There we go. MasterCard, right there, 22 cents. Okay, so its EX date was yesterday. The date of record for MasterCard is the 7th, which is Friday. So tomorrow is the actual physical date of record. So that means Monday, Tuesday, we'll be getting 22 times 400 is, I don't know, 880 bucks. Yeah, something like that. Yeah, 880 bucks tomorrow for our dividend payment. Oh, we'll probably just end up collecting more shares and then turn around and resell and trying to get rid of it. That's probably what we're going to end up doing. Okay. Oh, so considering that was the 5th, right, April 5th, we wanted to get in on the 22nd. Is that correct? Yeah, the 22nd. So let's take a quick look at MasterCard on the 22nd and see if it actually hit that 22 cents, MA. Okay, like I said, this is a great looking chart. And we want to look on the 22nd. Where is the 22nd? Oh, come on, really? Okay, so MasterCard, you would have gotten the signal on the 22nd, which means you had to have gotten in on the 22nd. Wait a minute, you would have gotten it on Sunday, which is the 23rd. March, okay, on the 22nd. All right, so you would have gotten it on Monday. So I would have sent it out on the 19th, which means you would have received it at 6 a.m. on Monday to make your play for the week. Okay, that's where we go 1 week at a time. We take all these stocks, the 19 here, the 11 here, the 24 here, 23 there, and the 7 there, all to give us, for the whole week. And then you receive that first thing Monday morning, which was the 20th. Now, had you gotten in on Monday, that would have been the 20th. That's totally up to you. So let's go back to the 20th, see if you gotten in on that. That wouldn't have been good. See that? Had you got in on Monday. But anywho's. All right, so you would have gotten the list on Monday, which is the 20th. Okay? However, MasterCard doesn't pay its dividend until the 5th, which we both agreed was on the 22nd. Okay, so let's go back here. Okay, the 5th is here. 5 days prior is the 29th. All right, and 10 days prior is the 22nd. So you would put your order in on the 21st, and the first thing in the morning off the 22nd, that's when you would have been filled in. Now the order on the 22nd, It opened up at 110.99, and the high of the day was 111.91. So it's almost $1 on the very first day. And the next day is up higher, and the next day it's up just a tiny bit higher, and then higher still. So it got to a high of 113.18 throughout the week. And the 10th day, which was the 3rd, I believe, because you would have been out on the 4th. Okay, because 4th would have been the 10th day, and you didn't want to hold it. You want to be out by the 5th, because the 5th is the day they go EX. It usually closes lower on the next day. It opens lower on the next day. Okay, so MasterCard worked out lovely for someone. I'm still holding it, so let's go back to where we were. Okay, so that's MasterCard. Hopefully that answered some questions for you. We would have gotten in on the 22nd, like there, what day did we get in? Yeah, I get in on the 22nd. All right, so here I am telling you should have gotten on the 22nd, and I did get in on the 22nd. All right, so I get on the 22nd. The opening of the day was, like I said, 110.99, and it actually hit the target. Depending, all right, let me rephrase that. Depending on which strategy you used. Okay, so let's go back. Depending on which strategy you use will depend on what profit you made. Okay, just one. Let me just reset this for a second so we can get back to see what we're looking at. The 22nd, right there. So today, okay, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Something right there. All right. Now, had you used the dividend investing, that's where you're just going to grab the dividend and then get out. You would have gotten in and out on the same day. All right, that's number one. The dividend equivalent, double dividends. You double the dividend, which would be 22. You multiply the 2, it's 44 cents. So you add that on top of the entry price. Had you gotten in at the opening of the day, 110.99, 44 on top of 110.99 is 111.41. So you would hit that also. Now, had you used a trailing stop, that would have continued throughout almost the whole week. And that's a little bit confusing using a trailing stop. So I'm not really going to cover that one. But the 4 strategies, okay? The dividend equivalents, yes, that's the dividend investing. Okay, yes, you would have made money on that one. Double dividends, you would have made money on that one. Dividend capturing. Let's quickly take a look at this. Had you gotten in, well, see, the dividend capturing is a tough one because where do you get in with the dividend capturing? Okay, I always tell people look 10 days prior to. Okay, so if you get 10 days prior to, which was the 22nd, and you got in at 110.99, the dividend was yesterday, which was the 5th. Okay, so you would have got in at, what was it, 110.99, collected your dividend, and you'd sell it today or tomorrow. Or wait a minute, today was right here. In order to collect a dividend, let me rephrase this. In order to collect a dividend, I'd still have to hold it until Friday, because Friday is the date of record. So we don't really know where we're going to end up Friday until the close of Friday tomorrow. So that'll give us a better indication of how much money we would have made using the dividend capturing strategy, getting in the 10 days prior to. Because 10 days prior to the EX on this one, like I say, was 322. Then we have to hold it sell to after the date of record. So after the date of record will be Monday. So look at selling this thing on Monday. So that way we collect the dividend, which is 22 cents. I think we have 800 shares, so we collect that. Oh, no, we have 400. Sorry, we have 400 shares. So 400 times 22 is $880. Or is that $88? No, I think it's just 88 bucks. Is that right? Hold on. No, that's 880 bucks. Simple math. Yeah, because 10 is $2.20. 180. No, it's 88 bucks. All right, so it's 88 bucks. Big deal. Where are we? Oh, okay. So we're not going to know until Monday exactly how much we're going to make off of MasterCard. So we're going to be able to collect all the dividends from MasterCard, and then Monday we go up and we turn around and we resell it for more than what we paid for it. So let's get out of there and let's go back to, I think that was it for those. Yeah, we look STX, MasterCard, Macy's, and Clorox. No, that's not Clorox. What is that? Colgate Palmolive. Drawing a blank. Anyway, with the dividend on steroids, we're up 16.2% for the year, for the first quarter, because we're actually the first week into the second quarter. So let's see how we do with that come Monday. But we're going to go over this a little bit tomorrow at 3:30 when the market closes. So let's jump over to the options and find out what we're doing over there. Let's go to monitor. Wow, we only have 4 positions? Wow. Alrighty then, let's quickly take a look at them. ABBV. ABBV starts out the year at 59. She trades sideways for a couple of months. Jumps up to another trading range of 66. Slow decline down to the end of October. And look at this. Right around election time, she jumps from 56 up to 63 and goes sideways for a while. And then right around middle of February, she jumps back up to another trading range of 65 where she is today. She's at 65.08. And we have 64.5, 65 calls. Okay. What that means is we have to make sure or cross our fingers that ABBV stays above 65 when it closes tomorrow. So you got 1 day, and we have only 8 cents to go. So if the stock goes up, we make money. The stock stays the same, we make money. And the stock can go down 8 cents, and we still make money. As long as she stays above 65, we make, I think it was, 40 or 45% on that one. Okay, it's not bad. It's a nice number to work with. Let's check the seasonality on ABBV and see what that looks like. Probably the same as it was when I first started. But for those of you who weren't here on Tuesday when we made these picks, or Monday when we made these picks, okay, here's where we are right now. This is plain to see that here's the crosshairs. Here's where we are today. Tomorrow, this thing probably going to stay the same, and then it's a nice upward trend. So this is something I wouldn't mind buying and holding, but that's not what we're doing here. Here we're just collecting the profits from the options, which look pretty good so far. All right, APA. Let's reset this. APA starts out the year trading in a range of 52.53, and it does that for like 3 or 4 months. Drops down to make a low of the year right in the beginning of August at 48, goes sideways for about a month, then she jumps up to a trading range of 58.59. Here's another one. Her trade goes, well, right around election time, she's at 57. And then from after the election, she hits the high about a month later at 68. Yeah, that's like a $10, $11 move to the upside in a month, just because of the election. Okay, from the end of the year to another low of the year, which has some support of 49 in mid-May, or beginning of May, she goes March, sorry, and she goes sideways to rest where she is now at 52.96. 52.96, and where are we? Wow. All right, so we have wow, we have some heavy positions in this one. We have 50 contracts of the 50, 50 and a half, which we're way in the money on that one, and another 50 contracts at the 51.50 contracts. And it looks like, well, so far we're making $1,790 off of that one. That's a nice little one for the week. Okay, CVS. Oh, well, let's take a look at the seasonality, see what that says. All right, the seasonality for this, as you can plainly see, here's where we are. Crosshairs right about there. And it's a nice steady upward, slightly sideways trend. So like I say, if I'm making money on this one going up, sideways, and coming down, I'm making the money on this one. So that's a good one. APA, I like that. One thing else I like about, you got the dividend coming up. When is the APA's dividend? APA. Go. So APA has its dividend in, kind of like all over the place. April 19th. Really? That's the 4th week in April. And where are we right now? Okay, right up there. That's right. So I can do this again next week. I can't do it the following week because we're going to do options. So I can do APA next week also because we get tomorrow's option and then we get the next option, and it doesn't have its EX date until the following week, into the 3rd week. Okay, that's good. So we can look at doing APA again next week. Okay. So let's go. Here we are, APA. Let's get out of there. Go back to my standard chart for looking at CVS. CVS. Wow, and that doesn't make anyone happy now, does it? However, it depends on the reason you're looking at the chart. Okay, now this is a 1-year chart. Now, she starts out the year pretty strong at 102, going sideways for about a month and a half, 2 months. Yeah, about a month and a half. And then she makes a slow decline to hit the low of the year. Now look at that. Election time, she was at 82. And after the election, she's at 72. That's a $10 drop. So this is the first one you've seen so far that I've showed you. It's actually dropped quite a bit during the election. Okay? She makes a low of the year at 69. That's just around the... That's 11/7. That's the day of the election. Oh, the day after the election. All right. Yeah, Monday. The day before the election, this thing made the low of the year at 69.89. Okay, so anyway, she trades sideways for the rest of the year to where she is now at 77.01. And let's see where we are. View trades. 77 and 77 and a half. Uh-oh. So we're only 1 cent in the money on this one. So we have 50 contracts. So there's a good possibility we're going to be buying 5,000 shares of CVS. Why? Because we needed CVS to close above 75.50 in order for us to make all the money on that one. So are we in a total loss? Not 100%, but I'm not happy with where it is. At the moment, with CVS, we're down 900. Do I let the 900 go, or do I buy it and try to recoup it from the sale of the options? Don't know. We'll have to discuss that more tomorrow because, like I say, tomorrow's Friday, the 3rd Friday. We're looking at it at 3:30 in the afternoon, just a half hour before it closes. Anything can happen tomorrow. So let's take a quick look at the seasonality on CVS to see what we might have in store for us tomorrow and the next couple of days coming up. Now, that doesn't make me feel good at all. Look at that right there. Now I'm asking myself, why did I buy this in the first place? Because the next month or so, this thing's going to go down. So do I get out and say, thank you very much, we'll catch you the next time? I think that's what we might end up doing. Just take the loss, because you can't win them all, okay? You hear that, everyone? You can't win them all, all right? I take my losses just like anyone else. All right, the last one is Verizon. Quickly look at Verizon, VZ. Okay, Verizon. This is basically going sideways, and it's not a big trading range anyway, 53 down to 48, somewhere in that area. So she starts at the year around 53, drops down in about 2 months down to what is that, 49, shoots up to make the high of the year in June 30th, the end of June, at 56, almost to 57. And then over the next 3 or 4 month period, she drops right down to make the low of the year at 46, which is just after the election. So they had the election, and this thing was at, where were we? The election, 47. She only dropped to 46. Right from after the election, she jumps up to 54 within a month and a half. And then she drops right back down to a trading range of 48, where she is today. And what? Do you see this? What is this gap down this morning? Okay, she closed yesterday at 49.02. Okay? Why would she open up today at 48.52? It's a good question. All right, what are we looking at for Verizon? Okay, actually, we own Verizon at 48, and we sold the option. Wait. Apparently, we bought 1,000 shares at 48.50 on Monday. No, on the 1st. That was Friday. Okay, so we bought 1,000 shares on Friday. And then first thing Monday, we sold the 48 call at 91 cents. So tomorrow, as long as this thing's above 48, someone's going to buy us out. And that's going to free up our $24,000. So we got 24,000 tied up in Verizon at the moment. And we're up 377 on that. So that's a pretty good deal. So we'll find out tomorrow what's exactly going to happen with Verizon. But it looks like we're going to be called out of that one, even with that gap down. I mean, I don't like seeing that at all. But it's pretty safe to say tomorrow, unless they have a good reason, this thing should be gapping up. Unless there's a good reason. Do I want to find out? No, I really don't care. I really don't. I'm making my money off of it. That's all I'm interested in. I bought the shares, 1,000 shares at 48.50. I'm selling them at 48. I'm making my 90 cents, 91 cents for that. So I'm basically good to go. Why did it drop? Don't know. All right, so that's everything for this week. And if I have any questions, let me check real quick, see if I have any questions. No questions. Gotta love it. Why is that? All right, so we get no questions, so we're out of here. And we're going to catch you next week, Monday. So if you're not already subscribing, make sure that you do. Oh, you didn't see that one. Where are we? Now tomorrow is the first Friday of the second quarter. Okay, so we're just starting the second quarter of the year, and look, we're already up 39,000, which is 39%. That's pretty darn good, and it's mostly options on vertical spreads. And I go into each and every one of those in pretty much in detail on Tuesdays. I usually buy the positions Tuesday afternoon, and we give the market some kind of a chance to do some catch up. And I'm usually averaging between 25 and 45% return on the options for the week, which is not bad, don't get me wrong. I mean, it's only a couple thousand a week, but it is what it is. All right, this is James signing out for today. If you're not a member already, you know how to subscribe. Go to the 10-Minute Trader, subscribe, get access to the software, get the access to the answers. I mean, we email you all the picks that I do. And then twice a week, I go over my picks in live trading. So this is James checking out for now. Remember, the 10minutetrader.com. This is James.